Welcome to Pressure Points. Our topic is Meta earnings. And as of this recording, the earnings call just ended. The stock is up about 12%. It entered the earnings call up about 9.5%. And I would say the overall pressure point is AI is having an incredible impact on their business and is expected to have an increasingly positive impact on the business going forward. I think we are going to see a re-rating of Meta shares. And as we jump into the pressure point, I asked myself the question, where do I begin? We'll start at the top line. Revenue growth of 22% compares to expectations of 14%. And they did 16% in the previous quarter, the March quarter. If you look at the revenue growth over September, December, and March, on average, it was up 19%. And so we saw an acceleration in year-over-year revenue growth over that period. And the reason why is that impressions are increasing, the ad loads are increasing, and so they're adding more ads to the ad load, and the users are increasing. So there's several layers that play into that. AI impacts all of those layers, and the impression side, it impacts when they are distributing the ads. On the engagement side, engagement is impacted by how they are getting people to come back to the app and join the app. And I think on the just on the content side as well, AI is being used more proactively. So that's kind of the substance is AI. This is a very tangible example of AI having a material impact on revenue growth. And so if we kind of dive a little bit deeper into that, let's just take the engagement piece as a second topic within the pressure points, is that the daily active users effectively are up 6% year over year. That's the same growth rate that they had in the March quarter. And that is similar to what the growth rate they've had over the past couple of years, average of 6.1%. Now, at the surface, that doesn't sound like much, but when you consider it's reached 3.48 billion people and the daily population of the internet is somewhere around 5 to 6 billion, something like that. I mean, it's really hard to grow a number that big, but to grow it at that kind of consistency tells us that something bigger is going on. I think, in fact, these products are becoming more sticky, more addictive. And this is a metric that a few years ago I thought was going to fade, and the exact opposite has happened. It just continues to march forward. And so continue to see great adoption on that front. As another piece to, I think, some of the optimism in the stock is related to Zuckerberg's comments about superintelligence. And of course, he has the superintelligence lab, but I want to take a step back. The topic of superintelligence has been largely debated, and there's been questions, I think, from well-versed people whether it is something that can actually come into reality. And so there's a debate whether it's feasible to hit superintelligence, and that's the ability of the machine to think beyond humans. And the classic example is that the machine will give us insights and we just don't understand where they come from, but we trust it and makes our lives better. The idea of superintelligence, I think Zuckerberg has championed it in part because of the superintelligence labs and some of the big hires. But this call, it was very clear. This was a breakout call for superintelligence. He said that the impact is going to be great. It's going to change the world, potentially change the world in the next few years. And his kind of bottom line message was, you have to take this seriously. You have to take superintelligence seriously. And I think that's kind of a message to the world and also to engineers on the recruiting side, just to really embrace or to try to draw some of these engineers and embrace what that potential could be. And the potential around it that he's painting is this concept of personalized superintelligence, which is the machine just knows exactly what you want and gives you what you want, even beyond what you understand what you want. Rough idea. But to get there, this has a big impact they're going to have a big impact on expenses. Expenses next year the growth of expenses is going to accelerate. Investors like that. The stock traded up slightly when they made that announcement. And then separately is CapEx for next year is going through the roof. It will be up about 48% in calendar 26 over 25. The previous street expectations was 11% growth. I mean, just an astronomical step up in the out year numbers. And I think the takeaway there is that Meta is serious about this. They really want to push this hard. They want to get the best talent. They want to build the best infrastructure around it. And I think that it's a sign that we still have a long way to go when it comes to AI. One last piece, this is not part of the pressure points, but just kind of the toy department, is they're going to continue to spend a lot on Reality Labs, kind of that $20 billion a year losses in Reality Labs. Fun with numbers, Zuckerberg says that growth is nice. They didn't give any specific numbers on the Ray-Ban glasses, for example, but they're probably doing around 10 million a year. That compares to 2.5 billion phones a year. So, I mean, we're just like, it's hardly even measurable how small this is. But he was pretty clear that this is kind of the way of the future to make AI easy for us. And if you take the case that by 2030, so in 5 years, they can do 100 million glasses a year, which I think is a reasonable take. And you look at how much they started to spend on Reality Labs back in 2021, and look at what, if you assume that they maintain that same 20 billion a year investment going forward, they would have spent to date, and just again, fast forward to 2030, about $180 billion in Reality Labs to sell 100 million glasses. So it's about $1,800 per glass of investment. So big time investment. He has been unshaken in his belief in glasses despite the shift away from the metaverse. Overall, just a great quarter and a sign that things are going to continue to go well for Meta. On behalf of Pressure Points, bye for now.